The Owen James Report.
Good evening. This is the Owen James Report. Former Prime Minister and Minister of Finance and Planning Edward Seaga has opined that if Jamaica is to escape the moniker of a failed state, its planners must replace failed economic strategies with new thinking, including pegging the exchange rate to a globally traded currency such as the United States dollar. Mr. Seaga suggests that such a strategy will yield several positives, including lower inflation, lower interest rates, stronger reserves, higher investments, increased economic growth, and greater job opportunities. However, the former Prime Minister, who was the main speaker at PricewaterhouseCoopers' post-budget press briefing, today warned that a pegged exchange rate was not an easy route.
But the concept of a peg exchange rate involves conditionalities which have to be observed. Tight fiscal discipline would be required, particularly if available foreign exchange is not sufficient to meet crisis needs. Adjustments would have to be made to expenditure in such instances. Interfering with the free flow of transactions in the marketplace has never been popular with the IMF. The fund holds rigidly to a system which allows the rate to fluctuate, whether freely or managed, as is the case in Jamaica.
Brian Dennin, a partner at PricewaterhouseCoopers, injected a bit of humor in his presentation to highlight what he said was the need for more clarity in respect of the imposition of GCT on food items.
Do we sell the bun with the raisins separately and then it's exempt from GCT? How are we going to do it? And water crackers, you know, we need, when I mentioned earlier about the importance of comprehensive definitions, we actually had a definition of crackers in the law, but in fact the order seems to have removed it. So we don't have a definition now for water crackers. You know, will we start seeing next year, next Easter, will we start seeing that we're going to be eating Easter bread rather than Easter bun with cheese?
PwC's partner Chris Dennin at a thought-provoking post-budget presentation earlier today. Good news for JMMB's latest venture. Managing Director of JMMB Keith Duncan tells the OJR that shareholders of the Capital and Credit Group have largely opted to accept JMMB's offer to purchase the company for nearly $3 billion plus a 30% share swap.
At this point in time, we're over 86% and closing on the 90%, which is our target. We should get there, but however, we would want all the shareholders to come through the doors and accept. Every shareholder coming on board is important.
Now finally, on the foreign exchange market, the benchmark US dollar as well as the British pound strengthened against the Jamaican dollar. However, the Canadian dollar weakened. The greenback gained 11 Jamaican cents, closing at an average selling rate of $88.59, whilst the British pound advanced by 38 cents Jamaican, closing at $137.30. However, the Canadian dollar lost 43 cents Jamaican to close at $85.89. That's the Owen James Report. Good evening.
The Owen James Report.